The next question is E13.22. Presented below is a list of possible transactions. So we have 16 transactions. Instructions: set up a table using the format shown below and analyze the effect of the 16 transactions on the financial statement categories indicated. So using the following code: increase, decrease, or no net effect. Yeah, so for each transaction, we will determine what is the effect on the assets, liabilities, equity, and net income. So we'll start with number 1. Purchase inventory for 80,000 on account. Assume perpetual system is used. Yeah, so if we purchase inventory is an asset, and then we purchase it on account, so it means that there's liability. Okay, so the effect on asset is increased, on liabilities is increased, and then for equity and net income, no net effect. And then number 2, issued an 80,000 note payable in payment on account. So we issue the note payable in exchange of the payment. So it is only the reclassification of the accounts payable to the notes payable. So it won't have any effect on asset, liabilities, equity, and net income. Yeah, because the amount of the liabilities will be still the same. And then number 3, recorded accrued interest on the note from item 2 above. So when we record accrued interest, there will be expense, and then there will be also liability. Yeah. So the effect is that on asset there is no net effect. The liabilities will be increased because there is interest payable, and then the equity will be decreased because there's expense as a result from the net income, which is decreased also. Yeah. And then number 4, borrowed 100,000 from the bank by signing a 6-month 112,000 zero interest bearing note. So we are borrowing using the zero interest bearing note. So of course our cash will be increased also with the liabilities. Yeah. So asset is increased, liabilities is increased, and then equity and income has no net effect at all. And then number 5, recognize 4 months interest expense on the note from item 4 above. So we adjusting the interest expense. So it is quite similar with number 3. So the effect will be the same with number 3. Yeah. So the asset has no net effect, liabilities is increased, equity and income will be decreased. And then number 6, recorded cash sales of 75,260, which includes 10% of VAT. Yeah. So cash sales, of course, our cash increase. Yeah. And then our liability will be also increased because there's a VAT. And then our equity and net income also increase because of the sales. Yeah. So all of the accounts are increased. And then number 7, recorded wage expense of 35,000. The cash paid was 25,000. The difference was due to various amounts withheld. Yeah, so expense will of course decrease the net income and therefore the equity also. And then because the cash has been paid, so asset is decreased also, and there's the remaining balances will increase the liability, become the wages payable. And then number 8, recorded employers payroll taxes. Yeah, so for payroll taxes, okay, there won't be any effect on the income, on asset. So it will have effect on the income equity because payroll means that it is the salary. Yeah. And then the payroll taxes will be held payable until the company pays to the authority. Okay. And then number 9, accrued accumulated vacation pay. So vacation pay means that we pay for the vacation taken by the employee. Okay, so there's no effect on the asset because it will have effect on net income, which is decreased, and also that will decrease the equity also because this is an expense. And then it will increase the liability because we accumulate the vacation pay until we pay to the employee. Okay, and then for number 10, recording an environmental liability and related asset. So of course asset is increased and liability is also increased, so no effect on net income and equity. And then number 11, recorded bonuses due to employees. So this is quite similar with number 9, because bonuses is an expense, so it will decrease the net income and equity, and it will increase the liability, before we pay it to the employee. And then number 12, recorded sales of product and related warranties assume both assurance type warranty and service type warranty. So when we are doing the sales, okay, it will increase our asset, assuming it is cash or accounts receivable, also will increase the asset, and then it will also increase the income and therefore the equity. And then liability will be also increased because there's a service type warranty. So this is still unearned. So because that's why the liability is increased. And then 13, paid warranty costs that were accrued in item 12 above related to assurance type warranty. So when the warranty costs happen, there is of course already happened. We already record the liability, so we just debit the liability. We will credit the liability. Okay, and then we will also credit the asset used because of the warranty expense. And then number 14, recorded a liability on a lawsuit that the company will probably lose. Okay, so probably lose means that we will there's a chance that we will lose, so that we must already recognize. We must already recognize the liabilities that may happen. Okay, so there will be no effect on the asset. Okay, and then because it will be an expense, so the net income will be decreased and also the equity, and there's a liability because of the lawsuit. And then number 15, paid service type warranty costs under contracts from item 12. Okay, so when it is happen, then the warranty expense will happen, and then our asset used for the warranty will be also decreased, so no effect on the liability. And then 16, recognized revenue, warranty revenue, see item 12. So our liability will be decreased, of course, because it's just the entry of the unearned revenue, and it will increase our net income because it's the service revenue that we have recognized, and it will increase the equity as well. So no effect on the asset.